All right, my people, we are live straight from Marbella. This is Jay, real from the Free Minds, coming to you live with yet another stream. And we've been eating good this week. We've been catching a lot of pips this week. So let's look into that. Let me just see that everything is loud and clear. That we have everything set up as we want to. Good morning. Yo, did you catch that trade yesterday on Bitcoin? The sell that I called out. Because I remember that I called it out on the stream. And then it started to drop, I think after lunch or something like that. Did you catch that, Martin? We're going to look at that one. Hope you guys get your coffees and teas ready. I'm drinking tea today. Been a little bit bad in my stomach, so I have to let it rest from the coffee. Yo, Bitcoin setup yesterday was massive. I told you guys that there's a massive drop due. That the drop will come. Yeah, we caught. So far, we have 170 pips in the bag from this Bitcoin trade. And what was yesterday was that we had this whole channel, this whole structure with the smaller channel and the bigger channel. We broke up and retested the bottom of it, and in the same time, we had a lot of fundamental news pointing at a direction for a sell for Bitcoin. So it was more than that, but that was the major signals that showed us that Bitcoin is about to break. In the same time, we have a lot of liquidity here, and the thing is like this. This is why I've put the sell so far down. Like on the way, we might chop around a little bit here. Maybe we come up a little bit more, try to get this 50% retracement as support again. But eventually we're gonna come down here and maybe even further. Like I still think we're going down all the way to 11,400. But first step is to breach the sweet spot here and get down to the demand zone. Oh man, sorry. Next time. So right now we're in the sweet spot, and sweet spot, like we could range here for a while. We could go down, break through if the sell momentum is really strong, but we could also range here for a while. So right now we're at a point where it's very good to take partial profits. Is what we had at TP2. Our take profit 2 was here at 23.30, I think it was. Because I knew that this level was important, and as soon as we broke it, we came in. Now we're probably gonna chop around. But the thing is, like, there's so many pips. Like this zone is so big in the sweet spot that even like from the top to the bottom, we have 1,000. We have about 100 pips to catch. So we have a lot of trade possibilities inside of here, even if we do range inside this area. Because sometimes, like a lot of people don't trade ranging zones. I actually like the bigger ranging zones because market becomes so predictable. It's so easy to see where it's going to turn. And what I do then is I just focus on smaller gains. I just focus on gaining like 20 pips from a trade, 30 pips from a trade. Sometimes just 10 pips, basically a scalp, and that's it. So with that said, when it comes to Bitcoin, You have a take profit 1 secured, you have a take profit 2 secured. You should have moved your stop loss. I put my stop loss all the way down to 25.50 is where I put my stop loss. I just did it to 25.50. So I would recommend you to do the same. 25.50, that's here. I can draw a line. That's the new adjusted stop loss. And we have about 100 from the start to that stop loss. We have made about 110 pips, and to where we are now, about 170 pips. That's that. If we go all the way down to my target area, which is the demand zone here, then we have finished off about 430 pips, guys. I'm saying no more. 430 pips. Let's do this. That's a massive trade. That's a trade that you're good for 2 weeks ahead. If you make 200 pips a week, you're solid. You're super solid. And I can tell you this: last week we made 625 pips. The week before that we made about 500 pips. For about 400 pips. This week so far, I think we had about 500 pips or something. So we had some massive trades, and ain't no playing with numbers or anything like that here. It's all straight profits, straight gains. All right, so Bitcoin. To move on, Bitcoin, it ain't much to do here. We're waiting for retest right now. We're not waiting for retest. The retest already happened, as I see now. And this is the retest I'm talking about. We have a lot of support and resistance here. This is the key zone that we don't want to break if market decides to go up. So this is the zone that we don't want to break. Oh, this here. We have massive support resistance right now, but if it flips, then support. So and when we broke through it, you guys see how it came, retested the zone, and broke below. But the momentum is not as big anymore. So here we have support that we broke through and retested as resistance. We're retesting it again. So maybe we see this market drop more very soon. But for now, we leave it like this. Move your stop losses, as I said, to 550, 25.50, and then we're good. We can let this one roll. If it drops further, we'll look at adjusting the stop loss even more. Let's get to gold. Gold had a rally yesterday as well. And where is gold right now? All right, so where is gold? Let's do this. We got to start from the top. So from this swing here, zoop, the last major drop, we been retracing about 23.6%. Make this a little bit clearer for you. Let's do it like this. So the dotted lines is what I'm looking at right now. So they will have a 23.6 Fibonacci retracement. And it's basically where we are right now. That will be sort of a key level to break. So this zone here, if we continue to move up, that's the zone we need to watch out for. If we break this one, I think we're going up much further. We're going to break this top. We're going to go up much further. But I said it before, when it comes to gold, I actually believe the opposite. I believe we're going to drop further, like at least until the 27.2 Fibonacci extension of this swing. No, from this big swing here. So this is what I see actually happening. But for that to happen, it depends a lot on the fundamentals. We need to see how the fundamentals play out. And we got news today. We're gonna check into that very quick. We got a lot of high alert news, red folders today. So anyways, we are soon to test the 23.2 Fibonacci extension. Sorry, the 27.2, and we have, you see this yellow zone here is the sweet spot from the, I think it's from this one here. Yeah, so that zone is confluent with what? The top of this sweet spot zone is confluent with the 23.6 that I was talking about. And it's also confluent with the top of the sweet spot from this swing here, from this drop. No, sorry, from this drop, I mean. From this top to this bottom, pulling Fibonacci. This is the Fibonacci sequence. And then we have that one confluent. So we have three indicators, fibs, from different swings confluently showing that this is a massive area of resistance. So what I see is basically this. Market coming here, testing it, coming back down. That's what I see. But things can change fast. Right now, this is what's happening. So until that, do we have a trade in gold? We are now at 1835. Man, it's been a massive pump for gold. 1835, and okay. Why is this not working? So, and yeah, we have about 50 pips, 48, 50 pips to get up here. So that's a trade. Question is, do we want to take that trade? No, I would do the opposite. We're not taking that trade. We're taking the sell. We're letting the market come to us. If you've been on the streams for a while, then you know I'm always saying let the market come to you. And this sell, so the entry for the sell is very clear. It's here. Yeah, I would have even set it above a little bit. We'll set it here at 1841, 1842-ish. Basically, to be honest with you guys, like you cannot put a sell limit on this one. You know what? Because all of this, I can tell you this, all of this here, this whole zone, this whole box is entry zone for a sell. And that is 39.3 to 42.3. So it's about 30 pips. So we have a 30 pip entry zone for the sell. So what we want to do is see how the market reacts inside this zone here to see where we can catch the sell. But I can tell you this: if market comes here to the top of this orange zone, then that's about 1842. Then that's a definite entry for the sell. Definite entry. So that one is, you just jump straight into it. Stop loss. Yeah, we got this support here. Wait, let's see. For now, we're setting a 30 pip stop loss and we're leaving it like that. But as I said, we need to see the market come up here and see how it reacts before we enter the sell. So no sell limits on this one. And you can do it, but it's risky. So from here to here is about 270 pips. That's a lot. But the thing is, that's why I'm excited about this trade here, because if this sell kicks in, it's exactly like our Bitcoin sell. Like, we got some massive pips to catch here. This one is 400 pips something, right? We going back to gold. If it goes like I want it to go, then that's about 400 pips as well, 450 pips. But that's a swing trade. That will take days. Nah, sorry, even more, because I actually see it coming down all the way here. So that's about 800 pips, 780 pips. But we'll take that in sections. So we don't go for the whole swing at once. We take it in steps, and the first step is to clear this sweet spot zone that we got here. All right, that's the first step. So therefore, what we will do is, when market reverses from the zone here, we'll pull Fibonacci. Let's say it reverses here, and then we'll know where the demand zone is, and we will have our stop loss, our last take profit at that zone. So for now, you just know that between 1839.60 and 1842, we have a sell brewing for gold. Keep that in mind. We leave it for now. I'm gonna set an alarm here at 39.40, so we don't miss that. From that, let's go to, I'm almost same zone, looking for a sell around 42, 43. All right, dope, nice. You know, Martin, for me, that's a confirmation. You know, when I see other traders having the same zones as I have, then I know, like, that sell just became even stronger now, because I see that other people see the same things that I see. So it's a nice confirmation. Appreciate your words, Martin. Appreciate you sharing that. Let's go to, so with that said, gold, we on hold right now. We ain't touching it until we see those movements. Let's go to Euro USD. Euro USD has also been interesting, but why is that? It's because, oh sorry, what am I doing, Dixie? I was thinking, like, man, that doesn't look straight. It's been interesting because of the Dixie, because Dixie has been moving in a certain way, and as you guys see, it's in this channel, and it's ranging inside this channel. And right now, what it's doing is it's testing these levels here. This level that you see here is a very strong support and resistance level. You have to go out on a daily time frame to understand it, but it's the last low that this drop created. It's the support or the resistance that the market then retested again, and finally broke through. And now we're retesting it as support again. So it's a very strong zone. It's also 38.2 Fibonacci retracement from this big swing. And when I say big swing, I mean it's a swing that's been going on since May 2021. So it's a big swing. And we have that 38.2 Fibonacci retracement level that we're testing as support right now. So very interesting level. And what I want to see for us to enter or buy in this case here, I want to see this. Boom. And candle close, because this one came up, retested, but the retest didn't hold. So market actually push through, and that's why I always say that we have to wait for those closing candles. In this case here, we actually would have caught a couple of pips, but we would have been stopped out. We had one retest and we had another one. So the market here was playing with us, to be honest. That's why we haven't touched it either. But sometimes we might as well have been inside, and then we would have caught these pips, probably take profit one, and then we would have been out. So to be safe, you guys know what I'm always saying. Rather no trades than losing trades. All right, we want to stack up those winning trades. We want to stack up those profits, those pips, and we've been gaining some massive pips so far on these streams and in the Telegram channel. So we want to keep stacking them up. So this here, yeah, I would have to put that one on 30 pips stop loss. I don't like to go over 30 pips when it comes to stop losses, but sometimes you have to. So it's either this or it's this. $27 pip stop loss. Or is this? But if this happens, this sell here, I think we're going further down. We're going down all the way to this white line here, which is a key zone. But we ain't there yet. If we come in there, we're going to investigate it properly. All right, let's do like this. Yeah, so right now, if we're looking at this swing here, from this bottom to this top, so this whole Fibonacci sequence here, or this whole sequence, and if we're looking at the Fibonacci levels here, then what we got is this. First off, you know, always looking for the confluence. Where's the confluence? The confluence is at 38.2 of that level, because that is almost is at the bottom of this resistance zone that we're at right now. So right now we're in this whole no range here. All right, snap here, like that. We'll say here. Just do like this. This whole white area here is a no trade range for me. So I'm looking for the market to break out below this or above this for us to enter a trade. And as always, we're always waiting for that breaking candle on the breaking 1 hourly candle, and then we're looking for the retest on the 50-minute time frame. We want to see a retest that, and we want to see that candle close, testing that zone and close. And then when the next opens, it starts to pump in that direction we want. We're entering. I'm gonna go through that whole strategy one day. If you guys want and need, let me know in the chat box. Can go through it step by step. But basically, what we're always looking for in our trades is confirmations, and we're looking for confluence. We want to see multiple indicators and levels in the market confluence, so that we know that there's different things in the market pointing in the same direction, all right, or pointing at the same thing. That gives strength to the bias. All right, so Euro USD, not to keep this too long, as I said, we're in a no range zone, and we want to see it break out either above or below. When it breaks out, we want to see it break out with a retest. We want to see it break out with a 1 hourly candle, close above, and then the next one come down and retest it. That's when we will check for our entry, which will probably be for a buy at 105.33 and for a sell at about 105.150. That's it. Let's go to Monera. I was looking at Monero earlier today. I didn't see anything, to be honest with you guys. Yeah, no, we got this triangle pattern just on Euro USD. These. Sorry, not triangle. I mean the wedge. That's what it is. So we got this wedge here forming. It's not finished yet. Looking for the breakout. But it's actually a very nice wedge forming. So we want to see that breakout happen, either to above or to bottom. Same thing as I said when we're looking at trading view. Yeah. This here is an interesting sell opportunity. Nice. All right, so we might have a Euro USD sell coming up. Okay, so look, I always say we're looking for the confluence, right? We got confluence when it comes to Euro USD, and this is it. First off, I need to tell you guys, it's Friday. So when it's Friday, markets are slow. It's not most often there's not so much volume in the market, but today we got news. So right now maybe it's slow, but we can expect a lot of volatility come up later. So what's happening now until the news is that basically it's just expectations for the news that affects the market, and then when the news hit, then we'll see like did we exceed or underestimate the news. Is just saying, you know, buy the rumors, sell the news. So you're basically trading the rumors, and when this news hit, that's when you see how accurate the rumors was. What we're looking at is that we got on the 4-hourly time frame, we on the hourly time frame, and on the 50-minute time frame. No, sorry, yeah, on the 50-minute time frame as well. We got the 20-day EMA at about 1.058. On the hourly time frame, almost the same, which doesn't happen very often. On the 50-minute time frame, just below that, we got the 200-day EMA. So in other words, this massive support here in this white zone that I've drawn out and that I make orange right now. So we have massive support in this zone here. And if we break that zone, there's a high probability for a sell if we break that zone. Depends on also what the dollar does for us. I would call a sell all the way down here, but we would take profits along the way. And this is only a 60 pip. Only a 60 pip sell. It's so crazy, man. We've been catching so much pips that you know, you get blind after a while. You get used to see those 100, 200, 300 pips. So when you see 70 pips, which is very good, you get like, oh, only 70 pips, but it's cool. What is 26 pip stop loss? No, I would adjust that. Let's keep it 26 for now. For me, this looks like resistance support at 1 exactly. Yeah, so this is the zone I'm talking about, and this is 1.058. You're right, Daniel. That's exactly here. So that's the resistance support that we want to break right now. I think it will jump like yesterday and push into the opposite direction. So you mean push for a sell basically, because the opposite direction here would be a sell. Yes, I think that's possible. But one thing, if we're looking at on the bigger time frame, you have to be aware of the sweet spot zone here. And the thing is, we have liquidity. We have massive liquidity here that needs to be filled. We have orders that need to be filled, and we haven't even gone into the sweet spot zone yet. Like we came just underneath, and nothing happened. So I think we still have to come in here, pick up liquidity, and then we can start move down. But if it doesn't happen, then I see this breakout from here. If it happens, then of course the breakout will be, the breakdown will be from here. If it wants to break down. So we just right now we stay put and we just wait. Probably this will play out in the coming hour or so, and you will see it in the Telegram group. Yeah, you will see it in the Telegram group. So stay tuned in that channel. And guys, I want to tell you one thing. So if you got value, if you got results out of these streams, out of the signals I've been sending up in the channel, because I know we've been catching massive pips, please do tag me on your stories for Instagram. Give some value in the Telegram channel. Comment. Let me know that you made profits, because sometimes it's dead in there sometimes. Like I see that people are watching, but I don't see any interactions. So comment. Let me know that you guys won. All right. Look, guys. This is it. To summarize this, market either comes up, picks liquidity, and then we have the sell from here, or it breaks this level, retests it as resistance, and then we will see this sell, which is not looking very likely right now because it looks like market wants to go up. But that's that. For gold, what did we say? For gold, we have this. We want to see the market. Oh. We want to see the market come up here to this sell area that we have, and hopefully hit the top of it, and then that's where we enter a sell. For what do we have more? Bitcoin, we just staying put and waiting for the market to break lower levels. Adjust your stop loss to 2550. That's what I have adjusted my stop loss to. Is this white line here. So we have secured 110 pips on that take profit. And last but not least, let's take a quick look at the fundamentals, because we got news popping out today, Friday. So you see JPY. So we haven't looked at any JPY pairs today, but JPY is dropping massive news today. It's dropping red folders. So you want to keep an eye on that. And GBP got a red folder. You want to keep an eye on that. They dropping their GDP. So that is important. That is very important. And the forecast is 0.1%. Yeah, let me see this. Yeah, man. So, okay, this is massive. So GDP report for GBP, for the Great British Pound. And last time it was minus 0.5%, which is, part of my language, but fucked up. That's basically a recession, you know. So, and we know that the UK took some hit financially, economically, the past year, and now the forecast is 0.1%. So we'll see if it exceeds or not. Then we have red folders for US, and those are always the most interesting for us. Why is that? Because we're trading the Euro USD, we're trading gold, we're trading Bitcoin, and we're trading a lot of US dollar pairs, or currencies that are paired against the US dollar. So that means whenever something whenever we got high alert news from the US dollar, then that is going to affect us a lot. So what do we have? We have average hourly earning. I don't even know what that is. Non-farm employment change. That is important. Unemployment rate. All right, let's look into this quick. I know news is boring, but you got to keep an eye on. Like if you want to make money in Forex trading or crypto trading, you got to have an eye on the news and see what's popping, because that's when you can actually make a lot of money. But that's also where you can lose a lot of money if you don't know what's going on. Because when news pop, you guys that been here for a while or been trading for a while, you know how it can go. It can move very quickly. Markets can move very quickly on that. All right, so average hourly earnings, change in the price business pay for labor, excluding the farming industry. Okay, this is very important. So this is basically if the wages has gone up and down. That's basically to summarize it. It is what it is. It's what businesses want to pay for their labor, what they're willing to pay for their labor, and that's a strong indicator on. If we are heading to darker times, recession, inflation, all of that stuff, or if we are going into brighter times. What does it say? Actual greater than forecast is good for currency. So the forecast is 0.3%. If it's greater than that, then it's good for the US dollar. Then we will see the Euro USD drop. We will see gold drop. Let's go for the next one. The non-farm employment change. Changing the number of employed people during the previous month, excluding the farming industry. All right. So yeah, you guys heard it. Changing the number of employed people during the previous month, excluding the farming industry. Actual greater than forecast is good for currency. We have 224K forecasted. And if we do more than that, same thing. Euro USD drops, gold drops, and so on. If we do less than that, it's the opposite. And then we have the unemployment rate. So everything is about jobs today when it comes to US. Percentage of the total workforce that is unemployed and actually seeking employment during the previous month. Actual less than forecast is good for currency. So if the unemployment rate is less than 3.4%, then that's good for the currency. That's the news that we look for today. And of course, we keep an eye on CAD. We keep an eye on GBP, especially us here living in Europe. That's very important for us. And we keep an eye on the JPY. Guys, with that said, I hope you got value out of the stream. I don't think nothing more has happened here. Gold, nothing. Still waiting for it to get to our trade zone. Yeah, Euro USD is breaking up, so it might become this sell over here. We'll see. We keep an eye on this. That level is, for you that don't know or can't see, it's 1.06. Yeah, 1.06 is the sell level that we're looking for if the market goes up for Euro USD. If not, then if it breaks down below here and retest that zone, then it's 1.0576-ish. That's it, guys. Have a blessed day. Be prosperous, trade safe, and take care.